It's the Market Skyline by Trading Justice. I got my co-host, brother, amazing trader, Tim Justice, with me here today. And Tim, looking at the market right here, obviously we got an absolute massive week in the market this week. You have the FOMC policy statement, you have interest rates, you have unemployment, you have manufacturing data, you have a ton in terms of earnings season as well. What are your expectations just from a pure, with all the not to mention the geopolitical stuff out there as well, but man, what a week in the market coming up here. What's your expectations?
Well, I think me and everybody else is expecting a break one way or the other. You've got a compression range coming in here with a triangle, higher lows and lower highs, and kind of all coming together. Fed meeting on Wednesday, unemployment on Friday. You've got earnings on some key players here. Matt, it's got to break and run, in my opinion, one way or the other. Now, I have no idea which way. I mean, I know that rising interest rates, we've had some pressure, but that 250 level and the 200-day SMA, I mean, you have to respect that as a buyer as well. I'm currently neutral, expecting volatility is where I'm at.
Yeah, and I think that's the right play on it. Obviously, we were looking at this last week. It was coming into this trend line, and both you and I are like, hey, listen, that's going to go down and touch the 200-day moving average. It came down, touched the 200-day moving average. It held its 200-day moving average. We talked about this last week in the market Skyline. You have a decreasing resistance level with an increasing support level. That is looking like a symmetrical triangle more and more. And as you can see, it's just, Tim, you talked about it last week. You're like, man, I expect this to even consolidate even more. And that's exactly what we're seeing. We're seeing the lowers get lower. We're seeing the highs get higher. And it's putting a lot of pressure on this. And I think at some point, especially with the depth of news this week, I think at some point you're going to break out of that, and you have the potential. And I say it's potential because it is a news-driven, volatile market right now. But you have the potential to find a direction and run pretty hard one way or the other. And it wouldn't surprise me if it breaks down and runs, and it wouldn't surprise me if it breaks up and runs. And I know that's not the all-star, 5-star rated type analysis that people want, but it's the truth when you're dealing with a symmetrical triangle. A symmetrical triangle is one of the most unpredictable and yet explosive technical patterns in the market. Because if you extend these trend lines out, Tim, at some point it's got to break this trend at some point, right? You look at this just from a pure days perspective, you're talking at the most 2 more weeks in terms of it being able to maintain this pattern. And if it doesn't do anything outside this pattern, then it just goes into dead on neutrality. So you look at the depth of economic news this week, Tim, you look at the depth of earnings reports this week, and you're talking about something that has the potential to finally find a direction in the marketplace. And I, for one, am excited for that, because I'm sick of getting stopped out on swing trades.
For sure. Yeah, no question about it. I would love to see some volatility come back. Now, if I'm looking at it from just a pure trading perspective, obviously bearish usually is faster than bullish, but we'll wait and see. Fed meeting on Wednesday, not an expectation for a rate hike, but you never know with those events. The big one may be that Friday when you were talking about with unemployment for sure. Yep.
You got the manufacturing data on Thursday as well. Everybody expects the FOMC just to maintain at 1.75, right? And and that's been pretty accurate. The Fed has not done anything to shock us in years and years and years. When they came off QE, they didn't do anything to shock it. When they did the curtail of QE for literally like over a year, they did curtailing of QE. They've been very, very forthright in what they're going to do with interest rates, and that's kind of unlike the Fed of past like when Alan Greenspan was there, and even in the early years under Bernanke. But ever since really kind of that QE infinity, the Fed has been pretty clear about the direction they want to move. And so they haven't really done anything to shock the market. However, the Fed's policy statement is one thing. The Fed talking about it in their speeches is a completely different thing. And that's another thing. You have a ton of speeches coming out of the Fed coming in after with Jerome Powell on Wednesday, and you got Thursday and Friday with Dudley and the other cronies at the Fed coming out there giving their speeches that could have the ability to move this one way or the other. But I've seen a lot with those speeches. They're kind of targeted, Tim. Some of the speeches from Dudley will be very dovish. Some of the speeches from others will be hawkish, and it kind of offsets some of that volatility. And that's why I think you get a little bit of offset with the Fed this week. But that unemployment report could be a catalyst for change. So if we expect the market to eventually break out one way or the other, right? And we don't know what is a strategy that somebody could do that could benefit if you expect the market to actually find a direction to the downside or to the upside.
Well, it depends on your level of skill set, obviously, but I do like the inverted butterfly trade. It's more of an intermediate level trade or higher. You have an inverted condor trade as well, but now we're talking about option spreads. Probably a simpler way to do it would be something like a straddle, where you play a call and a put. Now you have more complicated math that goes into that, in my opinion, but it's easier to trade it too. So something bi-directional, Matt, there's a whole family of them that fit in what we call bi-directional.
Looking at that straddle, let's just take IWM, for example. Or let's take the S&P. So let's say we expect the S&P to drive one way or the other here. And basically when you don't know what direction you want to pick, because looking at the chart again, Tim, on the S&P, it really doesn't have a clear direction here. So because of that, you might come to the market and say, well, I want to make sure that I take advantage of the direction one way or the other. So you can come to the marketplace and you can say, okay, if the current market is at 264, let's just go to the current market, the at the money strike price, which is the closest strike price to the current market price. And so you could say, okay, I want to go buy a straddle. I'm going to do a strangle here just because I'm offsetting it to make the numbers work. So as you can see, the value of the call option right here is basically 264, and the value of the put option over here at 264 would be 693. And so I'm just basically matching up the values there. I'm also matching up the deltas as best I can. So basically, per contract, you could expect about $1,400 total. And what that does is create a V-shaped risk graph where if you see an explosive move to the upside, you make money. If you see an explosive move to the downside, you lose money. And if the market just stays in this neutral range, you're going to lose time value is basically what you're going to lose. So if you expect to see a lot of price movement in the marketplace, given your technical conditions as well, and coming back to the S&P 500 on the future, so we can see our chart here. So if your analysis is, listen, we expect this to break out one way or the other, it's compressing down in that symmetrical triangle where it doesn't have a lot of room to breathe, and so it's going to break out one way or the other. The bears are going to retreat or the bulls are going to retreat, and you expect that to move quite a bit, coupled with the fact that we have so much economic news, from speeches to Fed to manufacturing to unemployment this week. That could be a proper way to go about trading this, is to look at that potential of a straddle. I do love the inverted butterfly in situations like this, where we're basically, you're selling options, you're buying options, you're creating a credit in that where you expect it to move quite a bit. It's more conservative than the straddle is. It's not going to make as much money as the straddle if you do see a strong move, but it is more conservative. But I would also say it's more of an advanced strategy versus a straddle, which is more of an intermediate strategy. So that is certainly something you could look at. Looking at our next one here, Tim, let's go ahead. And I know you like to look at the VIX here, the volatility index next. Tim, what's your read on volatility? Obviously, the market is kind of in that compression zone you talked about last week and this week. The volatility index is sitting at support at 1516. What do you see with the volatility over the course of the next week?
Sitting on support and with a bi-directional move kind of built into the market, like we were just talking about, you would expect volatility to pick up and move up. So it would not surprise me at all to see the VIX hit near 20 again. I'm not a net seller of options right here, probably a net buyer of options. Now, in my accounts and the way my philosophy behind trading that, I prefer selling over buying in general, as a cash flow trader. Yeah. But right here at 15, if you're just going to pick one strategy for one day, I think I would go long volatility here and expect it to rise.
Well, and couple that with the straddle play we talked about, where you're buying a call and buying a put. If we do see volatility increase based on everything we just talked about, volatility increase would help that strategy in terms of the straddle,
Mm-hmm.
and it wouldn't help it as much in terms of the inverted butterfly. So if your expectation is volatility to rise, that straddle play could be very, very good coming into a week where if the trader does expect some volatility increase as well as a direction on something. And I would certainly agree with that as well. Going on to the next one, Tim, let's look at what everybody loves trading over there at Tackle Trading is crude oil. Crude oil is one of the most popular instruments we trade over there at Tackle Trading. I think every one of the coaches trade crude oil in one way or the other, whether it's through cover calls or personal gold or something along those lines. Crude broke out of $60, broke out of this old resistance zone a couple weeks ago, and now it's kind of just flatlining here. And if you'll recall, last week we talked about how it's already ran from 62 all the way into 69, and a lot of times it will compress, it will go sideways, forming what we call a high base. And Tim, that's exactly kind of what we saw happen here. It also can retrace back down. It didn't do that. It formed this little consolidation pattern. It's like it's just taking a break, and it has a clear resistance zone up here. It has a clear support zone right there. So you form this little tiny little consolidation pattern, and the market's trying to find out where and when it wants to run again. The most likely direction when we form high bases in the market, Tim, where is it?
Well, the trend is your friend, and the underlying trend is up, and so most likely it's going to break and run to the upside. Now, the thing with crude oil right now, you had some rig count data come out, and that created some volatility, and then the stuff going on with Iran as well, Matt. I don't know what your take is on it from a political standpoint, but from a trading standpoint, if you take that supply out of the market, you decrease supply, you have consistent demand, the price should go up. And a lot of people are expecting crude in the mid 70s unless they can settle something in. Now, I would guess, and I hate to even try to guess when it comes to politics in the world we're in, that they will have a resolution to that whole thing.
Usually there is.
And figure it out. So that would end up kind of maybe bringing some of the pressure back, maybe it comes back a little bit. I'm bullish in general on crude. I love the uptrend. I do kind of see some room for a time correction into a neutrality for a little bit, but it's generally bullish. I'd call it a +1 right now.
This type of setup would be a setup where the turtle traders get really excited. You know what I mean?
Yeah.
And it's called a breakout pattern. And the risk to the breakout pattern is obviously fake outs, but the breakout pattern on a high base is very clear. You have a clear resistance zone here at 69.5. You have a clear support level right here at 67. So you don't want to trade in this pattern. Even if it tests up like it did on this day, you don't want to buy that just because it tests up. It tests up. A breakout is only confirmed if it closes above your breakout level. So if your breakout level is 69.5, what a lot of traders will say, well, it's got to close above 69.5. Now, you want to create some rules around that. And a lot of times, we use ATRs and whatnot, but technically speaking, I would put any breakout that is close to 1/2 of the ATR above that resistance level. That would be a technical breakout pattern, and that would also mean that it would create a big green candle. Big green candles look at momentum. So my thought is anything above $70 on a close would be a strong breakout. That's the number I'm looking for. It's a significant whole number. It's about 50 cents, which is about a third of the ATR above the resistance level at 69.5. So I'm personally putting that zone of resistance right in that 69.5 versus $70. That's where I'm looking at a breakout potentially above those levels. The stop loss easily underneath 69.5 would be perfectly fine there. Moving on, let's go ahead. Yeah, go ahead.
No, real quick on that one. If you're a buy the dip type of person as well, anything into the 66 zone, I think
66 would be good too.
Good support. Yeah.
Yep. I agree with that. That's this old resistance level right? Old resistance level becomes a new support level. You have resistance at 66, resistance at 66, a little bit of retracement held 66. That's a good technical pattern there as well. So buy zones from
Yeah.
Trading Justice, we're looking at anything above 70 or anything that retraces into 66 on crude. The next one we want to look at a good friend of ours, Pete Thomas, loves his commodities, loves his gold. Gold coming back down into support, kissed off the level we created last week, right here at 1310. It kissed it today. It kissed it many other times. Is there anything in gold that would change what we talked about last week or what we've talked about for the last few months in that it's a neutral sideways pattern?
No, it's been holding this range now since the back end of last year. You know, when we started the year, we came into this range, we developed a support zone around the 1310 mark, and we're right there. Some traders are going to be tempted to want to play something bullish right here, Matt. The only thing I would really consider would be like a credit spread if I had lots of cushion, and then a good money management plan. Obviously has to go into every trade that you ever take, but directionally playing support, I'm not that excited about this one here. The dollar's been showing a lot of strength. I know we're going to go into that one next, but as the dollar goes up, gold has been coming down, kind of that inverse relationship in the short term.
I agree with that as well. I think it would be a mistake to buy gold just because it's hitting support. I don't see the return justifying the risk and probability, given the fact that the dollar is showing some strength. I maintain that the only way to play gold right now is in the credit market, meaning selling options against positions, credit spreads, and futures, you name it. But anything from a directional perspective, I think, is a little foolish right now. And when I say foolish, it could also mean a little hopeful right now. I also drew some boxes here for the listeners when they're watching this on YouTube. This is the zone of support we've been talking about. We might draw that line at 1310, but it is this big old zone right here between 1300 and 1310. Same thing with up here at this resistance zone. Unless it breaks out of those levels one way or the other, I'm not touching it from a directional perspective. Moving on, I want to take a quick look at silver here. Silver getting beat up a little bit, maintaining the same type of neutrality. For those of you who are trading silver, that is your zone of support you're looking at, is 16 to 1620. Just want to quickly look at that. I still maintain gold is stronger than silver, but they're both kind of forming a similar pattern to a certain extent. And then the next one we're looking at here is the aforementioned dollar index. The dollar, we had resistance right here at 91. Neither one of us expected it to break out. It did. It broke out. It ran to 92. You got this old resistance support level over there, perhaps showing a little bit of resistance at 92. You don't really have anything above 92 until you get to the 93, 94 level. So looking at this, it's on a run. It's on its best run it's had for a long time, Tim. Is this a trend changer for you?
No, you got to trade what you see. I know I'm going to get stubborn on this one because I was wrong about it. And, you know, I've been wrong before. I'll be wrong again. And that's part of trading, you know. It is what it is. But that breakout I thought was going to be a little bit of a fake out. Expected a pullback, didn't happen. It just kept going, you know. And here we are at 92. There's so many levels of resistance above us right here. And part of me wonders this, Matt. As investors don't know where to put their capital, maybe the dollar is safe haven right now, you know, and they're bringing it back into cash and things like that. So I don't know. Bullish, you got to call it bullish. The candles are strong. You are going to fight some resistance, Matt, but those are really good price candles, you know.
Listen, you can't. It's sometimes I think we all get a little biased on certain things, and you know, the dollar was so weak for a year straight in 2017, really weak. It obviously had slowed its momentum here. It obviously shifted to a neutral trend over here. If you look at this on a weekly chart, though, and switching out to a weekly chart, just kind of get a little bit more time frame analysis, you're looking at a little bit of a base here, retracing back into some important resistance levels over here. I'm not really seeing a potential buying opportunity right here. If you were going to buy the dollar, what I would have to happen is I would need a little bit of retracement, maybe back down into the breakout at 91, and then potentially buy it. But to me, anybody who's listened to the podcast for any time frame knows I do not like chasing breakouts. If you don't hit the breakout
Yeah.
here, I hate chasing it up here. If you're the last one to buy, you are the first one to lose. And from a probability perspective, the dollar has not seen this type of appreciation, 2% in 2 weeks, for since 2016. And so, given that, I expect it to come back down in price. I expect the support levels on both silver and gold to hold this week, with the dollar coming back up. But I do not expect the gold or silver to break their trends. And if the dollar does show some strength, retracing back down into 91, you could see a potential move back up into the 93 level if 91 holds. And so if that happens, then gold and silver certainly could break their support levels, but I do not see that happening this week. And then the last one we always look at in the market Skyline is our cryptos, and that is Bitcoin. Bitcoin obviously double bottom. We talked about it with Pete last week. We also talked about it in Skyline. Both of us had it as a buy coming into 10,000. It's currently at 9,320. It's up $180 on the day. Really just kind of consolidating at this higher price point. Short-term resistance, Tim's 9,500. Long-term resistance level is that 10,000 mark. I do expect it to hit 10,000, but Tim, do you expect it to break 10,000?
Oh, baby, this is going to be a big one when it does. There's no doubt about it. I mean, that's a key psychological level. I think that you've got a reversal pattern there. You have the moving averages coming back up, Matt. You've got a new interest in Bitcoin. You can just feel it's different.
Yeah, there is a renewed interest. You're seeing them come back out on Facebook. There is renewed interest.
Yeah. Well, not just that. Institutions are treating it a little bit different, but I did find it funny over the weekend. I read another article from Warren Buffett saying that it's the biggest scam ever, or something like that.
Listen,
It has no intrinsic value. And
I love Warren Buffett. He is the oracle for a reason. He's the king of value investing, but he is not the king of crypto. And
no.
And so I'm not going to listen to Warren Buffett's take on crypto, because he's not there. Buffett is who Buffett is, but you know what? He missed out on the tech. He's still rich. He's missing out on the crypto. He's still rich. There's a lot of ways to create money, but just because he's the oracle doesn't mean that I have to listen to him on the technology that's going to be around when he's no longer around. And so I get that, but at the same time, I'm going to focus on the trend. I'm going to focus on the pattern. I don't think you can be a buyer at 93.60. I don't think you could be a seller at 93.60. If you're holding, you're holding, and it doesn't matter what we say. But I do believe that a breakout of 10,000 could be significant. It could run to 12,000 very, very fast. And so that's kind of that level I am personally looking at on Bitcoin. And that has been the Market Skyline for Trading Justice Podcast, episode 267. We're going to be right back with more from the podcast with Randall Edmondson and his experience in trading and investing and how we got into it. And it's just a wonderful, wonderful interview. So sit back, enjoy that. And as always, guys, if you like this, if you like the Market Skyline, make sure you give it a nice little like on the YouTube channel as well. And while you're there, subscribe to the Tackle Trading YouTube channel so you can get all the videos. Tim, I think we now have 700 videos over there on trading on our YouTube channel, thousands and thousands of hours of helpful advice and techniques and everything else we do over there with Tackle Trading. So make sure you subscribe to that, and we'll be right back with more.